So good evening once again. We are on Thursday, 26th of September, 8:30 p.m. As always, Thursday evenings, we take our live mentorship session. A lot happened in the market over the last 1 week, lots to be discussed, many channels to be drawn and deleted. But before that, thank you for joining in, and all the new joinees of mentorship, welcome to your first online live class. Like always, the first 10 to 15 minutes we will dedicate analyzing the Nifty, and after that I will take up each and every doubt of yours. So without wasting any further time, let's look at the weekly chart of Nifty over here. If you've been following us, so you'll know that these are the channels that we had drawn, and last week's video or last week's analysis, if you recall, was talking about this green banded support, this one at the bottom. And we spoke that on the weekly basis, if the market closes below my blue channel, this blue channel which is holding the low since December 2016, then that's not a good thing. And we had one huge sharp bounce back. Now, thanks to this bounce back, this yellow channel is out of the picture. This green channel is now out of the picture, and it has comfortably taken out this resistance as well. We are going to keep this because if market comes down, this will act as support. For the time being, we're going to keep 10,400, 10,000, whatever the levels are here, let it be there. So on the weekly charts, if we look at, then we are back to the blue channel. The price is behaving beautifully within this blue channel. And if everything goes well, and if market goes back to a new high and further up, then from an intermediate to long-term perspective, it's our blue channel which is to be considered. Medium to long-term. What about short-term? For that, we will now take you to the daily chart. Before I go to the daily chart, I would like to draw a new channel which will give us some amount of levels. There you go. Let me take a close look. Yes. So this is the immediate rising channel on the weekly charts for Nifty. And the levels that come out is close to that 12K mark. So we'll be back to previous highs, close to the 12K mark, this one. So this is a new channel that we've drawn, and this is the most relevant channel from for the market, for the Nifty, if it continues to rally further up. Now let's go to the daily chart. Let's go down one time frame lower. Let's keep this support zone that's been holding the market on the downside. This was the erstwhile resistance zone. We are going to keep this because if market slips down, this is where it is going to find some support. This is the weekly channel that we had drawn. We're not going to consider that on the daily. Now looking at this daily chart, what we can clearly see is this band. What is this? 23rd May low, 18 June low, breakdown and mid-July resistance. In terms of levels, 11,600, 11,700. So 11,600 and 11,700 are your immediate short-term resistances. There you go. So short-term 11,600, 11,700, and above that, the psychological 12K mark from the weekly new channel. These are the levels that we have derived. Let's go down one time frame further. The 75-minute charts. This is the immediate resistances that you can clearly see, the band that we have drawn. And I don't see any form of divergences shaping up on the top on the 75-minute chart. On the contrary, I have a positive hidden divergence shaped up between these 2 points. If I take up a channel between these 2 points, then this is the rate of acceleration which the market is into right now. This is the steepness of the current move. So we'll keep this for short-term understanding if this channel is maintained. Generally, such a steep channel is not maintained for long. It generally breaks down. But having said that, I think the 75-minute chart suggests that it has hit resistance band. It's created some kind of a positive hidden divergence, and there is scope for a bounce back. This is our immediate zone, above which it comes to this zone, the top of the red channel as well as the yellow channel. That's the 12K mark. What are the possibilities and chance of this bounce back going back to 12K? It all depends on how deep it retraces, if it at all retraces. If there are still shorts waiting on the system, waiting for a bounce, for a correction to come, then the market will go further up. If there is no retracement, as of now, we have not seen any form of any such retracements, then place yourself for a pretty good rally on the upside. But we are not going to make any form of predictions. We're just going to go by our analysis and the levels. So based on this, let me conclude. The markets moved up into an uptrend. The best thing is the blue channel on my weekly charts are holding beautifully well. And the blue channel can give significant upside targets close to the 13K mark from a medium to long-term perspective. The fact that the blue channel held once more, and after spending a lot of time, if you see down here in October 2008, it was just a month's time. But over here, a week's time. But over here, if you look at the index has spent close to this blue channel for 7 weeks. This is significant because if it holds, which it is holding, expect some significant upsides. In this case, 13,200. The other side of this story is now we know that this blue channel is supremely important. The break of this supremely important channel can lead to significant downsides also. As of now, it doesn't seem so. We are happy that the blue channel held well. Number one. In terms of levels, the index is close to its resistances, short-term resistances of 11,600 and 11,700. How did we find this band? From erstwhile lows and highs. We've seen that a 2-day bounce back, 2-day retracement, and now we have a bounce back. So 11,600, 11,700, and on top of that, we get 12,000 from the new weekly channel that we drew. On the downside, 11,200 is going to act as very strong supports. Generally, when we have gaps like this, which we saw between the 20th and the 24th of September, and if market comes down, the gaps hold and bounces back, then this gives a good opportunity or a good signal of a follow-through rally. So strategically, we stay bullish. We would like to find some retracement in the stocks so that we are essentially swing traders. We get a chance to enter some swing trades. The markets are not going to give that chance, and so you have to rely on the smaller time frames. So 75-minute charts or the hourly charts, strategically you should use for long trades. Shorts, don't try to implement unless the short setup comes close to your resistance bands, which is 11,600, 700, and then 12,000. This was a turn on a dime, held pretty well, and it seems like there's further upsides left. But was this a surprise? Yes, it was. So what is the guarantee that tomorrow will not be a surprise? We don't know. All that we can do is read the charts, analyze, put some levels, and trade accordingly. So strategically, we remain bullish. Swing trades will not come that easily on the daily charts, and that's why I suggest use shorter time frames to initiate swing long trades. So that was my take on the market this week on the Nifty. Like always, let's start talking about your trades, your doubts and questions. Feel free to put them in the chat box, and I'm going to take up each and every doubt of yours, for which I will be now using our TT Iris platform. So let's get going.